Welcome back to the channel, everybody. Thank you so much for joining me and allowing me to continue to be your daily advocate. If you're new here or you're not subscribed for any reason, please do me a huge favor and hit the subscribe button. Thank you to all of you who have been watching and following me for so long. It truly means a lot, and I'm glad that I can be this person.
Speaking of XRP and, of course, Ripple, the company itself, they have a new publication that was just released called Crypto Trends in Business and Beyond, New Value here being the headline. Now, this is something we did talk briefly about in a previous video at the very top level, and I asked if you wanted to go a little bit deeper. So in this video, I am going to talk a little bit more in detail here. Now, this is an extensive publication, about 44 pages, including, as you can see here at the very bottom, that they have done a significant amount of research in order to publish this, with about 40 sources cited that you can go for further research. But again, this is a real publication, well researched, as you might expect from an educational paper. So this document is going to require more consideration than we can cover in a video like this. So I'm going to address the findings and talk about each of the topics at more of the high level, but again, in more depth than we did in the previous video. In a previous video, we dedicated maybe 5 minutes to this, whereas here, I want to take 10 to 15 minutes to go through it a little bit more robustly. So here in this document, what are they looking at? Well, they say when you look at today's financial landscape, there's a lot of change. This isn't about any kind of potential or projected change, but real change, and there's lots of factors at play here. This report that we'll look at is going to focus on the role of key blockchain use cases like payments and DeFi, and the token types often referred to as digital assets for those use cases, including cryptocurrencies, CBDCs, and NFTs, as well as others. So we have this emerging blockchain-driven landscape, the Internet of Value, because it is doing for value what the Internet did for information, creating a vast, decentralized network that is driving incredible new efficiencies, powering amazing new capabilities, and spawning whole new industries. It's a network that involves many different blockchains and tokens. It's a network that transcends national borders, but is still regulated by nations, and it's a network that is often working alongside existing ways of doing business, but also plugging into and enhancing those ways of doing business, or in some cases, even replacing them. Now here's a quick chart talking about the evolution of the internet itself. So you began with Web 1, the Internet of Information, then Web 2, the Internet of Sharing, and Web 3, now the Internet of Value. And you can see in the initial stages, we looked at browsing, emailing, searching, moving on to sharing, purchasing, and the gig economy. And now in the Web 3 evolution of the Internet, we're looking at tokenizing, managing, and moving. And that is what the investigation in this report talks about. Terms are evolving along with the technology and use cases. Web 3 will bring new things to bear, and the forefront of these will be developing a new approach to managing value and the uses and experiences from this approach. We're still in the early stages of this transformation, and it's fascinating to see it take place. Innovation in payments has been central to the Internet of Value and is central to Ripple's contribution to it. And in this article, they do point out, or in this publication, they point out just how important this is. The Internet of Value is driven by the ability to move true value, your money, your funding, across borders, across the globe, seamlessly, quickly, and of course with very low fees. And that's where Ripple really excels. So in the report, they've organized the discussion again in those three major topics: tokenizing, managing, and moving value. And then given the fact that we see so much discussion among regulators about compliance, about meeting certain regulatory standards, there's an additional section discussing compliance and its importance. So let's go through the findings here, and then we can fill in with additional details as we go through the other sections. So in the big picture, there are very high expectations within institutions for wide-scale adoption and the impact of blockchain technology, crypto, and CBDCs. the technologies and assets are maturing, with more enterprises leveraging them in various ways and more consumers understanding and owning both crypto and NFTs. Blockchain-based use cases and their related benefits continue to multiply at a rapid rate for institutions, governments, and consumers, and as would be expected for what is still a relatively new technology, lack of understanding and the slow evolution of regulations in some jurisdictions, US, hint hint, are acting as key barriers to greater adoption. Now, specific tokens. NFTs are rapidly introducing consumers to blockchains and cryptocurrencies with exploding NFT volume growth and usage creativity. However, the NFT consumer experience has not yet been made as easy and rich as the consumer experience of key Web 2 scenarios for reasons related to both infrastructure and design. CBDCs have gone from design to reality, and while only a few countries have already launched their own, over 80 at the time of this publication are actively exploring the technology. For blockchain and payments in particular, CBDCs will add to the work already being done by crypto and stablecoins to drive the blockchain flywheel, as NFTs are helping drive that flywheel now for consumers. There are hints that finance leaders across both financial institutions and enterprises are again seeing tokens, including crypto, as an even more powerful force than the foundational blockchain technology which drives them. Tokens on the blockchain appear to follow a usage pattern, with exchanging, holding, and sending payments being the first wave of activities, followed and accompanied by more sophisticated scenarios supported by enhanced programmability. This has been true of crypto and is now unfolding relative to NFTs and CBDCs. Portfolios, payments, and capital. Institutions see the most value in crypto for two primary use cases. One, portfolio management, including hedging against inflation and hedging against other asset types, as well as asset appreciation. And two, for payments at nearly the same rate of response. Advanced use cases related to capital management around DeFi, tokenization of assets, and more are still new to the vast majority of businesses, and, though of high interest, not yet widely pursued. Player perspectives. Generally speaking, Asia Pacific and Latin America are more optimistic about the future of blockchain and its tokens, with the Middle East and Africa and North America somewhat less so, and Europe the most conservative. Enterprises tend to be slightly more optimistic than their financial institution counterparts, and within financial institutions, specific role types such as the capital markets leader and the payments leader tend to be the most optimistic segments. For businesses, speed benefits are often seen as more important and or more likely to be achieved using these technologies than cost benefits. In the case of payments specifically, this could be due to a lack of recognition related to the full costs of pre-funding, which respondents didn't rate highly as a pain point, but which we know from talking to consumers is in fact a massive pain point. In fact, often the most important pain point from their perspective. Asia Pacific customers are more drawn to the emotional benefits of NFTs than their counterparts in other parts of the world, in particular Latin America and Europe. And consumers, despite the ascendancy of specialized crypto exchanges in today's market, are very willing to purchase crypto from banks should they offer it. Sustainability. Few people, even among the most technical stakeholders, recognize the vast differences in energy consumption between blockchains, which likely contributes to sustainability not being a major consideration for most when selecting a blockchain. However, as understanding grows, as we're seeing more in the world of NFTs, particularly among creators and their fans, so does the pressure to leverage more sustainable options. Green blockchains such as the XRP ledger do exist, and they often also provide significant performance advantages on speed, throughput, and cost relative to less sustainable proof-of-work driven blockchains. So some excellent findings there just at the top level to begin with. Some of those things we're already aware of, but many are new or expounded upon further as we go through here. So again, we'll move rather rapidly through here so we can hit all of these at a top level, but I will link down below where you can get access to this document. You do have to actually sign up for the email, but they just send it directly to you, and it is definitely worth a deeper dive if you have the opportunity. So tokens. Tokenizing is going to be the very first topic they talk about, and I think it's the most important to start the conversation. So tokens, otherwise known as digital assets, are the avatars of value on the Internet of Value. When you represent value in a token, meaning in a digital form that is managed on a blockchain, you give that value new capabilities, including a rare combination of transparency and privacy combined with astonishing agility and decentralized security. Now, there's been a lot of conversation here about capabilities of a token, whether you can exchange it, lend it, send it, use it for collateral, and you can do almost anything instantly, almost anywhere, manually or programmatically, 24/7. This is a transformative way that we can shape the value or the digital or secure the shape of the Internet of Value. Now, there will be tremendous growth in tokenization, and the World Economic Forum, for example, projects that 10% of the world's GDP will be tokenized by 2027, which is incredible, seeing as that is only 5 years away. A lot of work to be done to make that happen. Now, there were some significant trends that we saw take place in the recent 12-year period with NFTs and CBDCs taking the forefront. So NFTs are non-fungible tokens and are verifiably unique, allowing it to represent one-of-a-kind items in the real or virtual world. There has been growing interest, and we have seen an explosion between 2020 and 2021, with over 10 billion worth of NFTs traded just in the third quarter of 2023 alone. NFTs are touted as being a key technology to drive value in the metaverse, which is growing in the conversation as well, and is envisioned as being a major future development where we will all participate in the not too distant future. So what's driving interest right now? The future's fast approaching. Many consumers still don't understand NFTs. Many are still skeptical, but those who are interested are trying to get in here at the initial stages. Early surveys have shown increased responses, and while there are regional differences and differences on both a functional versus emotional standpoint, we are seeing an increased level of interest and growth in the NFT space. And you can see from a genre standpoint, music, collectibles, gaming, sports, all of these are taking steps towards the NFT marketplace, and the interest is growing rapidly. Now, there will be different types of NFTs, whether they actually have a real world functionality or if they just exist in a digital standpoint, but the use cases will grow as time moves on, and they continue to talk about that here in this publication, and how NFTs can have increased utility not just for consumers, but also for business. This is an exciting opportunity for those businesses that are willing to take the initial steps to learn and develop their own marketplace for NFTs. Many use cases have been discussed as far as partnering with luxury goods and digital certificates of ownership or authenticity, and more use cases are expected to follow in the future. CBDCs are the other major topic of discussion, and it has been estimated that 80% of central banks around the world are actively exploring the use of what's known as a central bank digital currency. This is a token issued on a blockchain that represents a country's national or otherwise known as fiat currency. There's many reasons why central banks are not just exploring, but also beginning to adopt this technology, with countries as diverse as the Bahamas and China leading the way. Because CBDCs could be distributed to any citizen that has the internet through a computer, tablet, or smartphone, they provide a way of significantly increasing financial inclusion For example, making stimulus payments not only speedier, but also more widely distributed. If you were a U.S. citizen during the time of stimulus payments in the recent years here, you would have recognized that there were challenges as far as the distribution, from issues with paper checks, direct deposits, timing, and understanding who got what and when, and amounts being distributed appropriately. Well, this could be a potential way to help fix some of the issues along with distributions like that, and could even be utilized for things such as tax returns as we think about the tax season that we have entered into here at the start of the year. Here is a great table talking about some of the objectives, design considerations, and foundational issues related to CBDCs. Monetary policy, fiscal policy, and cost-saving objectives can all be met. Increased control, support of economic growth, and lower counterparty risks could help benefit central bank monetary policy with the CBDC. Increased financial inclusion, facilitated government disbursements, economic growth, and again, that lower counterparty risk would help with fiscal policy, and again, lower costs of cash, more efficient payment systems, and lower fraud and theft losses could help increase cost savings. Imagine the benefits of not having to print or mint cash or coins and distribute those across a broad country. Lots of cost savings could be realized there. Much of the government funding for the monetary system goes towards the actual printing and distribution of cash and equivalents. Design considerations, though, it needs to be user-centered, risk-based security, and has to be flexible with access, either retail or wholesale, anonymity, and it needs to be implemented and be secure. Now, there are many foundational issues and concerns around CBDCs: a legal framework, regulation and supervision, the government risk management, key governance issues, as well as organization, as well as the technology, and privacy really being a major concern there. Can the government with a CBDC see every transaction that you ever make and have sway on whether or not you are able to? Can they blacklist a account and make it so that you can't spend your money? So many interesting conversations need to be held going forward in order to realize any benefits of CBDCs while mitigating the risks and concerns. Now, as we continue the conversation here in the article, managing tokenized assets is the widest ranging category of activity that they're considering here in their report. Tokenized asset liquidity and functionality drive the efficiency of the internet and of value. And so it's not just holding, but it's borrowing, collateralizing, fractionalizing, farming, all these activities that take place with your tokenized assets. What does this look like, and where might they take shape? So managing value is important as we consider the broad future, not just 2022. Financial institution and enterprise use of crypto looks to grow at a rapid clip over the next 3 years, with an expectation of a 76% participation there, assuming that regulation allows for it. This is where part of the sustainability conversation comes in. With broader use across many institutions, how do we make sure that this is able to have a low impact on the world and have a great use case that will be able to be expanded on and grown over time? If you have a crypto asset that is not sustainable, how could it ever meet the needs of the global economy? And that's an important part of the conversation that Ripple leads and tries to drive home because of so much of the negativity around the mining process, particularly with Bitcoin. Now, there is a tremendous amount of benefits related to using crypto in both your personal and organizational standpoint, and they've done surveys and have some great graphics here that are worth taking a look through. Again, for time, we won't go through all of them, but do check out the link in the video description to do more research if you're interested. Now, there are barriers to adoption here because of the lack of access to exchanges or wallets and education more than anything else, making sure that people understand and feel comfortable with cryptocurrency and how it might be able to benefit their lives. Now, managing liquidity is also a key concern. Now, they are focusing here on the business use of crypto here, but this was also an important year for DeFi. How do you make sure that the assets that people want to utilize are ready when they need them? So liquidity continues to be a key concern. Now, we'll skip through some of the more enterprise use cases here because that, I think, is worth its own separate conversation. Let me know if you want to hear more about that in a separate video down in the video description, because enterprises will look and consider cryptocurrencies from a little bit different standpoint. Again, those concerns about liquidity and risk, those will be the same for both enterprises and retail, but they have separate concerns, and it might be worth discussing if you have an interest there. Now, the final section here of the main three is moving. The ability to move value and make payments across the globe with little friction, great speed, and high transparency are going to be a key driver of the Internet of Value moving forward. 70% of global financial institutions are interested in using blockchain for payments. What are some of the key benefits? Well, improved data security and data quality, the opportunity to expand markets, real-time settlement, the ability to grow share in current markets, transparency of payment status, the opportunity to generate new revenue, reduce fraud, true 24/7 access globally, the opportunity to expand, and of course, the increased ability to reduce your costs around the payment system. 33% of global consumers would consider using crypto for purchases, and 25% would consider using it to send money to friends or family at this point, and that number will continue to grow over time. So whether it's a business or a retail consumer, the interest exists and will continue to grow as the education of the benefits of using crypto for digital payments and transactions grows over time. Now, we talk here about a lot of the benefits for the businesses and the interest there on the payments for them, but those do truly proliferate to the retail customer as well. When you think about sending a bank payment, whether that is a wire transfer from your banking institution or using a service like MoneyGram or Western Union, the fees are very high, and you may not be able to have as easy access because you still have to go to a certain location to be able to receive those funds. Well, the crypto transfer of money across borders helps solve those concerns, and Ripple as a company is at the forefront of leading those discussions. And then finally here, in conclusion, they talk about compliance. Because this is a new technology and governments aren't yet on the same page, they need to understand and make sure that they are able to move forward in a way that makes sense. So a lot of the concern we hear on the House and Senate panels when they ask questions about crypto relates to fraud, relates to criminal activity, know your customer, and being able to trace things when people are doing illicit activity. 25% of compliance leaders surveyed by Ripple believe that blockchain will actually offer better solutions compared to traditional methods for KYC over the next 3 years. So there's actually the opinion that it will improve that. But the problem with compliance here that we're seeing now is there are significant barriers caused by regulators who are unwilling to provide clear guidelines for institutions as well as for these companies that are making innovations in the digital asset space. So in conclusion, 2021 was a difficult year, but a productive year in increasing the use cases and the blockchain-driven technological advancements we need to drive the future. There is a lot of great information here in Ripple's report, and again, it will be linked down below so that you can see more if you do have an interest in taking a deeper dive. Again, it's a 40-page document that has a lot more information than we can discuss in this format, but I do think it is worth the time if you have the ability to access and read through it. I hope you found this information to be helpful. If you did, make sure to hit that like button for the YouTube algorithm. Make sure to comment below what you would like to have our Sunday episodes called. Again, would you prefer Crypto Sundays, the more generic term, the Ripple effect, playing on the pun with Ripple the company, or the Frank Joe Crypto Show? It kind of rolls off the tongue with that rhyme there. Let me know what you think, and of course, don't forget to hit that subscribe button so I can keep you informed and so we can enjoy these longer form, more broad level topics together. Make sure you stay tuned for next week. I will be covering an XRPL project that I think you might be very interested in. It's one we haven't talked about before, but one I've been keen on for a few months, and I think it's worth discussing. So if you're interested in XRPL projects that are smaller or growing or you might not have heard of, then do make sure you stay tuned and are subscribed so that I can update you on those projects, because I think that will be a great part of our conversation going forward as well.
So enjoy your day, everybody. I'm always here for you. Leave any comments or questions below, and be sure to subscribe. But thanks, everybody. I really appreciate you. Enjoy your day, and I always have your back. So thanks so much, everybody.